Ladies and gentlemen, good morning and welcome to the Q4 FY26 earnings conference call of Glenmark Pharmaceuticals Ltd. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Utkarsh Gandhi, Senior General Manager, Investor Relations for Glenmark Pharmaceuticals Ltd. Thank you, and over to you, sir.
Thanks, Lizanne. Good morning, everyone, and welcome to the Q4 FY26 earnings conference call of Glenmark Pharmaceuticals Ltd. During today's call, we'll cover our performance in the fourth quarter and overall FY26. We also have an investor day coming up in about a week's time where we'll answer more strategic questions around mid to long-term strategy and growth drivers for the overall business. So before we get into the Q&A, let's review the performance for the quarter. For the fourth quarter of FY26, Glenmark's consolidated revenue from operations was rupees 37,706 million as against rupees 32,562 million in the corresponding quarter last year, recording an overall year-on-year growth rate of 15.8%. For the full year of FY26, Glenmark's consolidated revenue was 1,69,825 million as against 1,33,217 million, recording a YOY growth of 27.5%. In terms of some of the key highlights for the overall company for fiscal year 26, of course, the big highlight was IGI securing a landmark licensing deal with AbbVie for ISB 2001, which was developed using IGI's proprietary BEAT platform for USD 700 million upfront payment and a potential total deal value of 1.925 billion, along with tiered double-digit royalties. And Glenmark will lead commercialization across emerging markets once the product gets its approval. During the year, Glenmark also accelerated its oncology business expansion in India and emerging markets through the in-licensing of commercial rights for trastuzumab rezetecan from Hengrui Pharma and aumolertinib from Hansoh Pharma, and the launch of Tevimbra and Brukinsa in India. Glenmark's India business delivered a strong performance in secondary sales, growing at 1.5x the IPM growth for the year, and emerged as the second fastest growing company amongst the top 15 companies in FY26 as per IQVIA. In India, we launched differentiated products across our core therapeutic areas, so Tevimbra, Brukinsa in oncology. We launched the NebSmart GFP nebulizer, the world's first triple neb for COPD in respiratory, and Glipic, the semaglutide vials and injection for diabetes. Ryaltris, which is our global brand, continued strong global momentum, recording 50% plus secondary sales growth across its commercial markets in FY26, along with marketing authorization approvals and launch in other large markets like China and Thailand. Glenmark also initiated end-to-end commercialization of Ryaltris in the US as well during the year. We also established a branded dermatology footprint in Europe with the European approval for Winlevi, and we launched Winlevi in the UK during the first quarter of FY26. In the US, we strengthened our generic respiratory franchise. We got our first respiratory product approval, which was Flovent, generic to Flovent, fluticasone MDI 44 mcg. We got a CGT designation and exclusivity, 180-day exclusivity on the back of that. And we also got approval for fluticasone nasal spray OTC. During the year, we also filed 3 additional ANDAs for the respiratory in the respiratory category. And we also expanded our injectable franchise in the US further. We now have almost 20 products commercialized through partners. Monroe, of course, received a VAI classification from the US FDA post its inspection in November 2025. This enables a restart of commercial manufacturing and supporting future growth in our injectable and institutional business in the US. I'll just quickly cover the key markets, starting with India. So, sales from the formulation business in India for Q4 was at rupees 10,201 million as against rupees 9,430 million in the corresponding quarter last year, recording a growth of 8.2% YOY growth in the quarter. As I mentioned, Glenmark significantly outperformed the IPM in terms of secondary sales as per IQVIA. Glenmark's India formulation business growth was 12.3% during the quarter and 13.5% for the full year, compared to IPM growth of 10.1% in Q4 and 9% in March 2026. Glenmark is ranked 13th in India with a market share of 2.34%. The company has 11 brands in the top 300. And in terms of core therapeutic areas, Glenmark continues to be amongst the top companies in dermatology, second ranked in dermatology, third in respiratory, and fourth in the cardiac segment as per IQVIA data. As mentioned before, during the quarter, in Q4, Glenmark announced the launch of Glipix, semaglutide injection in India for the management of type 2 diabetes. So Glipix is available in both vials and pre-filled pen formulations. The product has been approved by CDSCO following a multi-center clinical trial in India. And the vial formulation supports physician-guided dosing aligned to patient needs, particularly in the early stages. Glenmark also introduced Sankalp, a patient support program designed to support therapy initiations and improve comfort with the injectable treatment. Tevimbra and Brukinsa were launched in Q1. In a short period, these two brands have seen very strong uptake in the market. And the company expects these brands to gain further momentum and meaningfully contribute to the India business in the next 2-3 years. In Q3, we had announced the launch of Nepsmart, which is the world's first fixed-dose triple therapy for COPD, covering glycopyrronium, formoterol, and budesonide. As a single, easy-to-use nebulized therapy, it minimizes the burden for multiple medications, and Glenmark's strong growth in the chronic respiratory segment in FY26 has been led by this product, along with some other products we've introduced over the years. Jabris in dermatology is first of its kind oral advanced systemic treatment, and this has also been well received by doctors in the dermatology segment. In terms of the consumer care sales in India, so consumer care sales were 1,265 million with a growth of almost 10%. Most of the flagship brands recorded double-digit growth in terms of secondary sales during the quarter, including La Shield, Bontress, and some of the newer brands like Aloe Vera and Episoft. Moving on to North America, the North America business recorded a revenue of 9,248 million for the fourth quarter of FY26, as against revenue of 7,146 million. This translates into a YOY growth of 29.4%, but net of the deferred out-licensing income recognition for ISB 2001, the core business growth in the fourth quarter was 7.8% YOY. Glenmark launched 4 products in Q4 and 13 products during the full year FY26, consisting a mix of oral solids, multiple injectable products, and respiratory as well. In the fourth quarter, we filed 2 ANDAs and a total of 5 ANDAs applications during FY26. Glenmark strengthened its respiratory franchise, as mentioned before, with the first ANDA approval for fluticasone MDI, which is generic to Flovent, 44 mcg. We were granted CGT designation and as the first approved applicant, and we are eligible for 180-day exclusivity upon commercialization. We also received approval for fluticasone nasal spray OTC, filed 3 additional respiratory products, and are targeting to launch 2 to 3 respiratory products in FY27 as well. Glenmark also initiated the end-to-end commercialization of Ryaltris in the US to mark a meaningful step in the company's continued expansion in the region. Glenmark would directly lead brand strategy, market access, and customer engagement for Ryaltris. During the year, Glenmark launched several other products, as mentioned before, and over the last couple of years, we built a large portfolio of 20 commercial injectable products through various partners. And Glenmark's injectable manufacturing facility in Monroe received DIR, which will enable the company to restart commercial manufacturing. Moving on to Europe, Glenmark's European operations revenue for the fourth quarter of FY26 were rupees 8,907 million as against rupees 7,335 million, recording a growth of 21.4% YOY. Glenmark's Europe business recorded strong growth during the quarter on the back of its branded business Across key markets, the CE region witnessed double-digit growth across all the key markets on the back of a strong uptick in key products. Western Europe also recorded good growth during the quarter, particularly markets like Germany and the Netherlands. Ryaltris continues to gain market share across all the countries where the product has been launched either by Glenmark or by its partner Menarini. The company is continuing to focus on sustaining the increased contribution from branded products, particularly in the respiratory and the dermatology segment. As mentioned before, Winlevi has been launched in the UK and has gained good traction. And we have also received the MA approval and will be launching the product in our licensed European markets in FY27. Glenmark is also planning to expand its commercial respiratory portfolio in Europe through the launch of 2 to 3 additional respiratory products in FY27. Moving on to emerging markets, for the fourth quarter of FY26, revenue from the emerging markets region was rupees 8,979 million as against rupees 7,898 million for the corresponding quarter last year, recording a growth of 13.7%. As per the IQVIA March 2026 data, Glenmark's Russia business recorded secondary sales growth of 11%. Glenmark continues to do well in the dermatology segment in Russia. Is now ranked 8th as per the IQVIA data. In LATAM and MEA regions, Glenmark recorded good growth in the secondary sales during the quarter. We have launched multiple respiratory products during FY26 in this region, which has aided overall performance. Ryaltris continues to be the leading nasal spray in allergic rhinitis in most of the markets in emerging markets where the product has been launched. Glenmark plans to launch Ryaltris in Brazil in FY27. In the APAC region as well, double-digit secondary sales growth was recorded in key markets like Malaysia and Australia. Glenmark continues to hold significant market share in the overall dermatology and respiratory covered market across the APAC region. As mentioned, Ryaltris was approved in China and Thailand and launched in Q4 by the company's respective regional partners, Grand Pharma and Organon. Very quickly covering our global innovative portfolio. So we spoke about Ryaltris. Ryaltris as a product is now commercialized in 55 markets as of March 2026. It is expected to be launched in additional 8 to 10 markets over the next few quarters, including, as we mentioned, some large markets like Brazil. And in Q4, the product was launched in China and Thailand, and we are expecting significant uptick in the growth on the back of these launches. Winlevi, as mentioned, we have launched Winlevi in the UK, and we will be launching initiate commercialization in our licensed European territories in FY27. Kinhayo, which is envafolimab. Glenmark, as of March 2026, has already filed MA applications in 24 markets, and the first commercial launch is expected in FY28. But we have also initiated early access programs or named patient programs from regulatory authorities in 7 markets, including some markets like Kenya, Mauritius, Uganda, etc. We have also initiated a global multi-center phase 3 trial in neoadjuvant or adjuvant treatment of patients with stage 3A, 3B non-small cell lung cancer. Trastuzumab rezetecan partnered with Hengrui. Glenmark has advanced its preparations for initiation of MA applications for Trastuzumab rezetecan, which is a HER2 ADC, which was licensed from Hengrui in Q2 FY26. Our first wave of MA applications are expected to begin by the second half or by end of first half FY27. This product has got approval in China for the treatment of HER2 non-small cell lung cancer as well as HER2 breast cancer, and recently they filed BLA application for HER2 advanced colorectal cancer as well. Aumolertinib partnered with Hansoh. So in Q3 we had entered into an exclusive agreement with Hansoh for aumolertinib, which is a third generation EGFR tyrosine kinase inhibitor or TKI for the treatment of non-small cell lung cancer. Glenmark has rights across India and most of the emerging markets. Aumolertinib is already approved in the UK in June 2025 for first-line treatment of adult patients with locally advanced or metastatic non-small cell lung cancer with active EGFR mutations, and it also received MA approval from European authorities in February 2026. It is marketed across 5 indications in China, and Glenmark has submitted MA applications for aumolertinib in multiple markets as of March 2026, and the first commercial launch is anticipated during the second half of FY27. Quickly covering IGI. So key updates in IGI on the oncology portfolio, ISB 2001 or ABBV 2001. The patient enrollment in phase 1 dose expansion is progressing rapidly with the goal to determine an optimal dosing regimen. Efficacy and safety data continue to remain promising and consistent with what was previously reported. We also selected a clinical candidate for ISB 2301 and the program is rapidly advancing towards the clinic with IND submission intended for the end of the calendar year 2026. And in immunology, ISB 880 or LAD 191, this is the product licensed to Almirall, and the phase 2 study in hidradenitis suppurativa continues to advance with ongoing patient recruitment. And Almirall also plans to initiate POC for an additional inflammatory skin disease for this product. And ISB 880 is partnered with Astria or BioCryst. From the Glenmark management team, we have Glenn Saldanha, Chairman and Managing Director, and Anurag Mantri, Executive Director and Global CFO. I'll now hand it over to Glenn for his opening comments.
Thank you, Utkarsh. Good morning, everyone, and thank you for joining our earnings call today. FY26 has been a defining year in Glenmark's evolution. Despite an evolving geopolitical environment, we delivered a reasonable business performance and made meaningful progress on the strategic priorities that will shape our future. The major highlight of the year was clearly the IGI landmark agreement that we signed with AbbVie for ISB 2001. This transaction clearly validates that the IGI's proprietary BEAT platform technology works and will work in the future on future assets too. We are very excited by the broader IGI pipeline, starting with ISB 2301, which we think also could be a world-class asset. We are currently working on filing an IND before the end of this calendar year for ISB 2301. We have 2 other assets in the pipeline now, ISB 2302 and 2501, which also look very promising. During the year, we strengthened our branded business in India and emerging markets, expanded our differentiated portfolio through multiple new launches, advanced our US respiratory and injectable franchise, and continue to scale our global brands such as Ryaltris. We are also expanding our innovative oncology portfolio in India and emerging markets via some strategic partnerships with Hengrui, Hansoh, and of course Alfa, the envafolimab partner. In the US, our respiratory generic franchise achieved key milestones, including the approval of fluticasone 44 MDI, where we have CGT status, and fluticasone nasal spray. We also received an EIR from US FDA with a VAI classification for our Monroe facility, enabling the start of manufacturing and supporting the future growth in injectables and institution business. Looking ahead, our priorities remain clear: driving growth in the core therapies, globally scaling our branded business, and building a strong, innovative oncology franchise in India and emerging markets, and growing our US generics business via respiratory and injectables. We will continue to advance IGI's innovative pipeline over the next 4 or 5 years. FY26 is expected to be a very strong year for us. FY27 is expected to be a very strong year for us. In FY27, we are making some strategic investments to accelerate growth in markets like India and emerging markets. We will share more details on the roadmap at the upcoming investor meet. With this, I'd like to pass it on to Anurag Mantri to give his opening comments, and then we can initiate the Q&A.
Thank you, Glenn. Good morning, everybody, and good afternoon to all the international joinees. During Q4 FY26, we delivered broad-based growth across India, Europe, and emerging markets. Our growth in the US market was affected in Q4 by the timing of approval for certain key products, leading to lower absorption of fixed costs in that quarter. While gross margins continued to show healthy momentum, core operating margin was impacted by the lower absorption of the fixed costs, as well as the higher distribution expenses linked to current geopolitical and supply chain environment in Q4. On the balance sheet, happy to share that we achieved our guidance of gross debt free at the end of FY26, while maintaining a healthy cash position. During FY26, intangible assets addition were increased primarily because of strategic in-licensing transactions for innovative business, launch of injectables in US, etc. We view that these as a long-term investment, particularly in oncology and high-growth branded markets. We have now a very strong balance sheet and done with the necessary changes in the businesses, and going forward, we shall see a strong performance in FY27. We also continue to focus on working capital efficiencies and disciplined capital allocation for FY27. We are targeting a revenue of 17,000 to 18,000 crore and an EBITDA margin of 21 to 22% in FY27, considering growth investment for expansion in India and emerging markets and evolving geopolitical environment, currency movement, etc. We will share with the more granular details on the growth drivers during the upcoming Investor Day. Thank you.
So thanks Anurag. So with that, we can open the floor up for Q&A. Lizanne.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is on the line of Damayanti Kerai from HSBC. Please go ahead.
Hi, thank you for the opportunity. My first question is on the US business. So you received approval for fluticasone inhaler on early March, but it seems like the fourth quarter number doesn't reflect any benefit from this product. So can you just help us in understanding how do you see this product ramping up and what kind of market share gain you intend here?
So, as you rightly said, we received, fluticasone nasal spray and fluticasone 44 MDI, right, both at the end of March, right? Obviously, fluticasone.
If I look at like FDA, I think approval you received approval in early March. Sorry,
Supply chain.
Yeah, but by the time the product gets to the market and by the time you commercialize, right, March is pretty much,
So there was a supply chain because by the time we took the product to US market because of the disruptions in the supply chain thing, so we could not really achieve the sales, much of the sales in that quarter.
Yeah.
And therefore, that's, as I mentioned, there was a fixed cost absorption issue. But I think.
Oh my God. Okay, sure.
I'm sorry.
No. Sorry, my bad. My second question is on the Hikma partnership for Ryaltris. So, did you came out of that partnership because you mentioned you will be doing commercialization on your own?
Yeah, so we've now, as of April, right, we've commercialized Ryaltris on our own in the US market. And that's, that's something we are in the midst of doing. We think, the team can do a better job, right, by selling the product on our own. So we'll see how it evolves, right, in the US. But I think overall the takeaway message is, look, Ryaltris is a huge product. We have, over $100 million of sales last year. The brand at secondary sales growth is about 50% on the brand right now. So it's doing exceedingly well. We are launching it in markets like both Brazil also this year. We've got Brazil approval, so that will be a big commercial launch in addition to the US launch. So I think all in all, the brand is doing exceedingly well, right? And will continue to grow from strength to strength over the next few years as we go forward.
Okay, and my last question is, in India, while you have grown above the IPM, it seems like the diabetic market, the diabetic segment is still lagging behind the market. So are we not still set in terms of the channel inventories, etc.? So what is dragging diabetes segment growth?
Diabetes, as you know, right, there are 2 or 3 molecules, right, which we had, which are continuing to struggle, right? So one of them is obviously remogliflozin, right, being an SGLT. After DAPA went generic, right, we really struggled to gain market share on Remo, right? And the second one was teneligliptin with sitagliptin going generic, right? So these are the 2 molecules that continue to struggle in our franchise. Now with the launch of Glipec, clearly, right, we anticipate that, the diabetes franchise will get back to growth, right? You should see growth coming back starting Q1 onwards. So if you look at our India business overall, right, each and every segment in India today continues to outperform, right? I mean, in the dermatology space, we ranked number 2. We continue to gain market share. In respiratory, with the launch of GFB Neb and some of the other respiratory launches, right, we are continuing to grow and gain market share. In cardiovascular, with the Telma franchise, continues to do exceedingly well, right? And then, of course, with oncology now, with the new launches of Tevimbra, Brukensa, those are continuing to do well. And then diabetes was the only segment which was lagging, right? But with the launch of Glipec, that should change, and you should see good traction starting Q1, right, for the diabetes franchise. So India is on a very strong note, and I think FY27 onwards, you should see strong growth coming out of India.
Okay, thank you.
Thank you. We'll move on to the next question. That is on the line of Nitin Agarwal from DAM Capital. Please go ahead.
Hi, thanks for taking the question. Glenn, on the revenue guidance, this seems like a pretty aggressive number. So can you just give us some color on what constituents you're seeing driving growth first? I mean, 17 to 18,000 on this current base is a pretty large number.
So I think, Nitin, if you remember when we did the transaction, right, we had guided to about 17 and a half. Now we've made it 17 to 18. Clearly, we are seeing strong growth in all our markets. Keep in mind that particularly India and emerging markets, with the launch of some of the oncology assets, right, amlotinib happening this year, followed by trastuzumab, rezetecan, and then envafolimab, right? The growth rates will be very, very high over the next 4 or 5 years, right, because of these major launches, right? We anticipate the innovative pipeline to be a significant contributor for the company over the next 5 to 7 years. And we'll give you more color around it at the investor meet. But from here on, you can see high growth coming, right, from the company, primarily on account of some of the innovative oncology launches, Ryaltris, our US business also, which has been a drag for the last 4 odd years, right? Now with the launch of fluticasone MDI 44 and 2 or 3 more respiratory launches yet this year, right? And then of course the Sol FTFs that we have, right, which are all happening this year, should help drive the growth. So I think all in all, barring Europe, which we think could be high single digit, everywhere else the growth number will be exceedingly high, right, across the board.
Sorry to push that point, Glenn, but our second half sales, when second half typically is a stronger period for us in a year, is about 7,700 crores or thereabouts, right? Even if you analyze that, I think we're still talking of a very meaningful ramp up on even if you analyze this H2.
So, Nitin, basically, as I mentioned in my opening commentary, that US sale which we targeted should have been much higher in Q4, which obviously got spilled over because of this last moment supply chain and go to the market issues in US, which will obviously. So this year we'll see a full fraction of the fluticasone nasal spray, Flovent, and other launches in US. So US should do much better than what we did in last H2 in that. And also the India will continue to grow strongly at 15% plus in the market. And emerging market and Europe both should, so that's how it will contribute to. So it's based on the stack up what we have launched in the various markets.
And secondly, on Anurag, on the balance sheet, I think there has been a very sharp increase in receivables, as well as inventory and payables, but especially the receivable increase is quite stark. Can you help explain that?
So, receivable increases primarily because of three reasons. As we mentioned at the H1 commentary when we mentioned is that there was primarily we stopped the pre-collections. So that was one reason. Second reason was that certain of the MEA region collection in this quarter got delayed because of this entire war situation. So we'll come back to the normalcy with that. And third was that some certain currency translation also of the debtors also sits in there. So I think overall, if you see our net working capital are close to 107 days, which are still best in the industry, and will continue to. If you recall, we gave you the guidance of 115 to 120 days. So we are well within that, and we will continue again. FY27 will continue to be the same guidance to have a net working capital best in the industry. And if you if you see that we did a gross debt zero, because despite all these challenges, certain lower sales in US and all these things, still we achieved the gross debt zero with a 1,200 crore of cash position. So balance sheet is in now a strong shape, and I think overall we'll continue to monitor working capital efficiencies very closely.
And so on the working capital, the number of days you computed by analyzing the last quarter, that's the way you compute the number of days?
So we compute the number of days. So you are right. I think except for inventory, which is always forward-looking, debtors and creditors are always based on the previous actual number. So only the inventory you build it up for the forward-looking. So with that.
Okay, because I was looking at. Sorry to persist on this point. Our receivables are up almost 1,500-1,600 crores. I mean, even from September onwards, they're up almost like 1,000 crores for the second half of the year.
So if you see, we have inventory, you are saying that it's actually based on forecasted basis, it's around 71 days. Debtors come to 107 days and receivables. So overall, we are coming close to 97 days of actually the net working capital days. So I said, even if you take it on a past basis, it's coming 107 days. So we are well within the range in terms of our net working capital deployment. In fact, sorry, go ahead.
No, sorry, I was sorry to cut. I mean, I was just saying we should assume the year-end, number of days which are there. It should what should sustain going forward also. Yeah. So as it's mentioned that we are clearly maintaining that we will be the best in the industry, and 115 to 20 days we will be below that. So that's what we are targeting that going forward. Despite that business increasing and everything, we will continue to release cash from the working capital efficiencies. And last thing on the capex, if you can split between tangible and intangibles for the year, and how should you look at this going forward?
So this year, if you see, intangibles were close to 800 crore plus because of the reason, as I mentioned in my opening remarks, primarily due to the upfront payment and milestones associated with various partnerships which we executed in oncology and derma portfolio. We also see some of the BD activity in our base business, especially in US, where we launched multiple partnered products in injectable segments. So because of that, so this was more of a one-off, I think, on an intangible, and this was more for to support our growth in the future. I think FY27 onwards, we should see a coming down on a normalcy level of around 900 crore sort of capex number total.
And this is the last one on your liabilities. What are the committed payouts which are there over the next couple of years?
Liability. Sorry, Nathan, I missed your question.
No, what I meant is, in terms of some certain committed payouts, what are those on maybe some licensing deals or some, litigation payouts and all? What is the total amount of committed payouts which are there on our lab, for the next 2 years?
So liabilities are basically that committed payouts are actually largely mostly related to the legal payments deferment, and second is that what RGI income deferment which we have done of $70 million every year, that is also sitting in the liabilities various parts. So which is $70 million every year.
I was looking more from a cash perspective. What is the cash payout on your committed liabilities which are there for the next 2 years?
We can come back to you with the cash thing. It's largely related to legal expenses, deferments, and the scheduled payment, how we have committed to that.
Okay, thank you so much.
Thank you. Before we take the next question, we would like to remind participants that you may press star and want to ask a question. The next question is on the line of Tarang Agrawal from Old Bridge. Please go ahead.
Hi, good morning. Couple of bookkeeping questions and...
Sorry to interrupt, Mr. Agrawal, your audio seems to be very low.
Hello. Hi. Am I audible?
Yes, go ahead.
Hi, good morning. Couple of questions, bookkeeping and one on Ryaltris. So I'll probably start with Ryaltris. Glenn, you started out saying that Ryaltris was about $100 million of revenues for FY26. What was this number for 25? And if you could give us a sense, composition, the geographical composition of the revenue and your outlook for 27 on this, given that Brazil's slated to launch.
So clearly, look, Ryaltris is a big brand for us, right? And we continue to grow. 100 million is the base for 26, right? I don't have the precise number for 25, but I think going forward, right? I mean, you should easily assume like we'll grow, 30+%, 30-40% at least for the next few years, right, on this brand, right? Going forward.
And I mean, is it concentrated in some specific geography, or it's more like fairly?
It's broad-based, I think. Broad-based. I think, look, Ryaltris is a global brand for us now, right? I mean, we sell in almost all our markets, right? And a couple of markets where we didn't have the product launched was Brazil was one of them, which now we're launching this year. And then, of course, the US, we were through Hikma, now we are doing on our own. China, we are in the process of launching also. I think sometime this year we launch in China. But I think post-reimbursement, the product will be a significant product in China. So I think I would say it's still in the launch phase in many markets. So that will give us the real growth for the brand this year, right? There are many smaller markets, for example, Thailand and multiple markets where we are still in the launch phase, right?
Got it. On the P&L, exceptional items are roughly 373 crores. Roughly 323 crores is on account of a litigation settlement. So I was just curious what the balance 50 crores is all about. And also, sizable other income this quarter, approximately 189 crores. So what is contributing to this?
Okay, so largely the first exception item is largely because of the US settlement and associated legal cost of these settlements and various other expenses related to this settlement, because these are the settlements as such, and we don't assume any of the liabilities in these settlements. On other income, largely that is because of the translation and the forex impact because of the sharp currency movement. That's coming as other income in our P&L.
Got it. And allocation of R&D spends for Ichnos for Q4 would be about 150 crores?
Yeah, roughly around 150 crores.
Okay, thank you.
Thank you. The next question is on the line of Tushar Manudhane from Motilal Oswal Financial Services. Please go ahead.
Yeah, thanks for the opportunity. Sir, just to for FY26, with respect to that AbbVie deal, how much has been now booked for last 2 quarters as the milestone income?
So we book around $17.5 million every quarter, what we said, and which contribute to $70 million in a year basis. So last 2 quarters, $35 million were booked.
Got it. So subsequently in FY27 again another, so additional as compared to FY26, so effectively $34 million will sort of add up in FY27.
Yes.
I'm just trying to.
You're right.
Any new approvals which you are sort of factoring in the assumption for FY27 revenue for US apart from fluticasone?
So see, in the US we have these 2 sole FTFs, okay, right, which are coming up, right? So 2 exclusive products, right, which are coming in the end of Q3 and Q4, right? Gabapentin, enacarbil, and axitinib, right, which will come up. The second thing is we have a couple of more respiratory launches coming up, okay, right, in the US in FY27. So I think all that makes us believe the US will be a major growth driver for us, right, in FY27.
So effectively, how much are we considering that the number to scale up, because fluticasone nasal spray is an OTC, so that will take its gradual pace to build up. And if you could elaborate in terms of the upcoming respiratory launches, are they again like that can scale up the way typical generic product is, or it will be gradual?
So look, we have 3 respiratory products filed. One is fluticasone RX is expected pretty quickly also, right? Additionally, we have fluticasone 110, which is already filed, right? And we have one more MDI which is filed, which is expected to launch this year. So I think if everything comes through, it will be a strong year for the respiratory franchise. Additionally, we have, as I said, the 2 sole FTFs.
Got it, sir. Because effectively it is like almost 30% growth over FY26. India market probably 15%, emerging markets maybe another 20%. So there is going to be a heavy lifting if I do back of the envelope calculation from US, and which is like sort of plus 30% sort of a growth, at least in constant currency, and apart from that maybe 5-6% of rupee depreciation. So effectively we are targeting at least 40-45% revenue growth in US. Is that what you are indirectly?
I can't give you. I think that's too granular. Okay, right. But I've given you all the drivers. You can do the analysis, right, on why we believe that the US will outperform.
Got it, sir. And secondly, with respect to this litigation settlement, is there any further amount that might come up, or we have already provided for what?
So we are almost done with everything. We have 1 or 2 outstanding cases which will get settled over the next few years, right? It will take a few more years, but we are pretty much done with everything now.
And lastly, how much the R&D spend is going to be for FY27? Q4 FY26, first of all, I missed the number. Sorry for that. And full year 27.
Q4 was 225 crores, Tushar.
Full year is around the same range, 7-8% of sales.
Yeah.
All right, sir. Thank you.
Thank you. The next question is on the line of Sukrit Patil from Eyesight Fintrade Private Limited. Please go ahead.
Good morning to the team. I have two questions. My first question to Mr. Glenn is, just want to understand forward-looking guidance on what type of strategic levers are you placing in 26-27 to expand the company's leadership in respiratory, dermatology, and oncology therapies, accelerate biosimilars, and innovate drug pipeline, and manage risk from regulatory pricing pressures and global competitions? That's the first question. I'll ask my second question after. Thank you.
So I think we covered most of the drivers, right, for FY27, right, in terms of growth drivers, right, across the different markets. We talked about. Sorry, there's a lot of background noise. Can you go on mute, please?
Yeah, give me a moment.
So I think overall, we touched on most of the growth drivers, right, in FY27, right. A lot of the growth will come, as we discussed, the US, a lot of the US market growth, right, will be key. The second thing is, of course, India and emerging markets with the launch of some of the oncology products and the investments we are making in derm and respiratory, expansions, along with our India business, the Glipic launch, GFB launch. So multiple growth drivers, right, will drive our FY27 guidance, right, to achieve these numbers.
Thank you. My second question to Mr. Mantri is, again, a forward-looking one. What type of capital allocation and risk management frameworks are being applied in 2027 to balance dividend payouts with funding for R&D in specialty drugs? Any hedge against forex and raw material volatility? And any levers put into place to sustain liquidity buffers on large-scale expansion projects? Thank you.
Sorry, I could not hear the last line fully, but I think let me just try to explain on what I understood is that, and then you can add it to that. So capital allocation side, what we said to that, we have a disciplined capital allocation. We said that IGI, we are setting aside for the $70 million for the future spend. R&D, we said 7 to 8%. We will continue to do that. As Glenn explained that we will be investing in our core businesses this year to expand our core businesses, which we will tell you in detail in our forthcoming investor day, because we are expanding and we are reinvesting in the businesses. So this year is actually largely, basically the capital allocation is largely on this expansion of our core business, the $70 million of IGI spend. R&D continue to be at 8% because that's innovation in R&D we see a good growth driver, and continue to be and working capital efficiency will continue to maintain to address all the geopolitical uncertainty, what you mentioned, the raw material volatility, currency volatility, all this we will continue to maintain with the high level of working capital of management and efficiencies. So hope I think I covered you.
Yeah. Thank you and best wishes.
Thank you.
Thank you. The next question is on the line of Tarang Agarwal from Old Bridge. Please go ahead.
Hey guys, just a suggestion. I mean, there's some basic numbers that we look out for every quarter. Net debt, gross debt, capex, R&D, and what we've observed is, disclosures are not standard. I mean, some quarters you'll put forward those disclosures, some quarters you don't. So it'll be helpful if it just saves a lot of time for everyone. So that's one. Second, has there been a leadership change in IGI recently?
So so we take your suggestion on some of the disclosures, right? We'll look into it. On IGI, we had a guy called Cyril Contu who was running it some time ago. There's a new lady, Lida Paco, who's now the CEO of IGI, and she will be there at the investor meet. She was CEO.
And how long has it been since Cyril's moved on?
It's been about maybe 6-8 months. At least 6-8 months.
Okay.
And Lida was She was Chief Medical Officer, so she's been with us for the last 3-4 years at least.
Okay. Okay. Great. Sure. We'll meet. Look forward to meeting her. Thank you.
Thank you.
Thank you. Ladies and gentlemen, that was our last question. I now hand the conference over to Mr. Utkarsh Gandhi for his closing comments.
Yeah, thanks, Lizanne. A quick reminder to everyone that the information, analysis, and statements discussed during the today's call describing the company or its affiliates, objectives, projections, and estimates are forward-looking statements. These are based on current expectations, forecasts, and assumptions and are subject to risk and uncertainties which could cause actual outcomes to materially differ. No representation or warranty, either expressed or implied, is provided in relation to the conversation and the documents provided. And the company undertakes no obligation to update or revise any of the forward-looking statements because of new information, future events, or otherwise. We look forward to seeing you at the Investor Day. And with that, we can close the Q4 earnings call. Thank you, everyone, for joining us today. Thank you.
Thank you, members of the management team. Ladies and gentlemen, on behalf of Glenmark Pharmaceuticals Ltd, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.